Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand the latest trends of the stock markets, also the sectors and the stocks that are buzzing the most in trade, and what should be your investment strategy as we move forward from here. All of that we will discuss with an expert. But first up, a quick check of how the markets are doing at this point in time. Remember that the markets are trading down right after yesterday's week closing. We are seeing some cuts again on the benchmarks, 0.5% odd for the Nifty, which is down 18,291 at this current level. About 94 odd points of a cut is what we can see here. Look at the Sensex. There's a cut of almost 350 odd points right there, 61,350. That's the level it is trading at, down about 0.5% as well. Look at the broader markets, the mid cap and the small cap 100 indices. There's a mixed trend there. The small cap 100 index is seeing some cut of flat to a negative bias, but the mid caps are absolutely flat at this point in time, about 0.1% odd. So similar kind of a trend is being seen on both these indices as well. The India VIX is again seeing a spike of 6.5%, 14.6 levels again right there, so indicating some more volatile moves that we can expect today. In terms of the advanced decline ratio, you are seeing slight tilt towards the declines. 34 stocks on the Nifty 50 are down in the red versus 16 advances at this point in time. In terms of the sectors, well, apart from say the gains which are being seen in the IT pack, the royalty pack and the PSU banks, also the pharma pack, that's the one that's leading in trade today. Rest of the sectors are actually down in trade. So it's the pharma that's come back in trade today quite strongly, 1.8%, almost at the day's high level, 12,849. The current level for the Nifty pharma today. We'll keep an eye out on that. But what's not doing well and what's kind of spoiling the sentiment for the street today, the Nifty bank clearly down 0.5%, led by the losses in private banks and the financial services both. The FMCG stocks also down by 0.9%, autos dragging by 0.5% as well, and the private banks not really participating in the overall gains that we are seeing in the PSU banks as well. Let's now see which are the top gainers and the losers as far as the Nifty is concerned. On the gaining side, you do have some pharma majors really seeing climbing on the street today. Divis Laboratories as the top of the charts, 3.7% uptick for that one. Cipla from the pharma space again. Apollo Hospitals from the healthcare basket, 2.4% uptick. Sun Pharma is also up in trade. Dr. Reddy's, a lot of these pharma names are really doing very well today. Apart from this, it's UPL that's come back, a 1.2% uptick in right now. Tech Mahindra, Hindalco, the other movers on the upside today. On the losing side, you do have FMCG majors like Britannia that's down in trade. From the auto baskets, it's Maruti Suzuki that's down by 0.8% odd today. Bharti Airtel is seeing a cut of 0.7%, HDFC, ONGC, the other drags at this point in time. But let's welcome our guest for the day. Mr. Kranthi Bathini joins in from WealthMills Securities. He's the Director of Equity Research there. Good afternoon, Kranthi. Thank you so much for taking the time out. Well, first up, your reaction to the markets that we've been witnessing some cuts right from yesterday. Are we going to see any deeper cuts, or is this again some consolidation zone? And at this point in time, it's better to stay cautious and be with very, very stock-specific investments for the investors. What would you really advise?
Sakshi, if you see the global synchronized rate tightening is happening across the globe, that's the reason markets are responding to the commentary from all the global central banks. And the influence of global cues also there on Indian markets, as Indian market is one of the outperforming market. And Nifty, after reaching all-time high, there some kind of consolidation what we are witnessing. And also last night, the news is there is a kind of rising COVID cases across the globe that's creating some kind of pressure on the market. But I can sense markets are in a consolidation phase, and every dip in Indian markets is a very good opportunity. That's what proven in past 7-8 months. Whenever the investors bought at a dip, okay, they are handsomely rewarded over a point of time. And what we are witnessing is a sectoral shift in the market, and the leadership is changing. And sectors like sugar and last fortnight, what we witnessed is there is the rally in stocks like fertilizer sector. So the leadership is changing. The mood is completely stock specific right now. There are opportunities, so investors no need of worry immediately. They can use every dip to enter into the market as we are coming to the end of the year. So some kind of FIA participation also coming down. So altogether, markets are shaping up well. They are in a good consolidation zone. And as long as Nifty is there at 18,200 range, we are in a complete uptrend going ahead.
Okay, let's look at some of the news developments that we saw, yesterday overnight, and that are important for the investors to track as well. There's news from the capital regulator of the stock market, SEBI, Securities Exchange Board of India, which has now decided to phase out the mechanism of buying back of shares by companies through the open market route in a gradual manner. Now, this is following the recommendations that were made by the Keki Mystery Report, which suggested that the open market share buybacks are actually prone to misuse and should therefore be phased out. This decision was part of the several major measures that were taken by the capital regulator at the board meet as well yesterday. Mr. Bathini, your thoughts on the move and how should investors really view this? What does it really do? Is it a favorable measure for the investors? How do they stand to benefit? Could you give us all those clarity?
Sakshi, with respect to the measures taken by the capital market regulator SEBI with respect to buyback through stock market route is concerned. Okay, so there are some operational challenges initially for the investors to tender these shares through the in the buyback offers through exchange mechanism is concerned, and the money is to directly credited into the investor's account. So there is a kind of uh, kind of initial operational problems with respect to the investors are concerned, tendering the shares through the stock exchange rule. So SEBI has come up with the advisory which is going to benefit the investors over a period of time. Slowly they are going to phase out the uh, buyback route from the stock exchanges. So it will they are going to come up with the new measures which are going to benefit the investors over a period of time. So it is just the commentary. We need to see how the operational guidelines that are going to come over a period of time. This is the advisory made by the regulator. We need to see in next couple of weeks how the operational guidelines that are going to come. Overall, it is a benefit of the retail investors are concerned.
Mr. Bathini, but market regulator has also permitted companies to make upward revision to buyback price until 1 working day prior to the record date. How is this going to be beneficial for the investors now?
This measure will definitely help the investors any upward revision, because if the tendering is low and if the investors want to take the advantage and company have the reserves, they have an option to revise the buyback price. So definitely it is in favor of the investors only. So we need to see overall how these changes going to change the entire scenario. We need to wait and watch, Sakshi.
Yeah, but do you also believe that this measure, once it comes into process, can actually help create a level playing field for all the investors and avoid the present mode of open route, which is perhaps vulnerable or seen as vulnerable to favoritism?
Yeah, that's correct. What you said is there might be a in the current system there is a kind of vulnerability you said between the retail investors and the institutional investors. That's what the regulator want to do, give a level playing field between the institutional as well as retail investors are concerned.
Right. Now, there's another news that has also come from SEBI. Let's look at that. There are around 15 to 16 of the largest broking firms, including both Zerodha, Grow, ICICI Securities, 5paisa, Motilal Oswal Financial Services, will be designated as qualified stockbrokers and will be subject to higher compliance requirements. Now, this is as part of the attempts by SEBI to prevent concentration of broking power with too few companies right there. Let's first listen in to Madhabi Puri Bhuj, who is the chairperson of SEBI, and what she really said in this regard.
Concentration risk which exists in our market today. There are, as you know, for instance, the top 10 or top 12 brokers will account for very, very large percentage of the market volumes. So in order to mitigate the concentration risk, what is proposed is that on the basis of some very transparent criteria, first of all, certain brokers will be identified or designated as qualified stockbrokers. And there will be an enhanced requirement on them in terms of risk management, of course, all types of risk, market risk, IT risk, cyber risk, etc. Much higher standards will be expected of them. And there will be a higher obligation on the MIIs and on SEBI in terms of monitoring them as well. So, for instance, in terms of our inspections, etc., frequency of inspection, regularity of review, etc., all of that, there will be a greater responsibility on the MIIs and on SEBI as well.
All right, so that was Madhabi Bu, Chairperson SEBI. Mr. Bathini, your comments on this step as well, to mitigate the risks, the concentration risks that Chairperson really talk about. Now, some of the broking houses will actually be liable to higher scrutiny and higher compliance. We're already seeing some reaction on the downside from Motilal Oswal Financial Services as a stock. It's down by 1% odd. But how do you view this step for both the broking community and for the investors as well?
Sakshi, I need to make a disclosure. I am also coming from the broking community. So the measures taken by SEBI definitely help for the benefit of retail investors and market health also, because the domination of volumes by a few 10, 15, the big organization, it gives a concentrated risk for the overall market. That's the reason SEBI want to have a focused measures and more closer monitoring of these operations and also regulatory and their operations are concerned. So it benefits the market in a long-term scenario for the benefit of the retail investors.
All right. Mr. Bathini, let's move to the markets now and see the sectors and the stocks that are buzzing in action and look at how you would really advise investors to approach these particular sectors and stocks. Let's start off with the pharma sector. We do know that it has been an underperforming sector so far this year after the benefits that were seen for this sector and the multiplier effect for the sector during the COVID period. But this year has largely been down for the pharma sector. But today it's made a sharp comeback. What is it that on account of, and is that a suggestion that this sector could be looking at some incremental gains from here? Should the investors keep an eye out here now, and on which particular stocks that you would be bullish on?
Sakshi, we need to see this is the first uptick for pharma sector after a very long gap, and probably the news is the growing COVID cases across the globe given some kind of positivity, because pharma stocks are came down nearly on an average. Predominantly the pharma sector was underperforming, and majority of the stocks are underperforming from past 12 months and so. So today is the first tick. We need to see the next couple of weeks how the rising COVID cases across the globe and what are the key beneficiaries because of the rising COVID cases. We need to see the entire pharma space right now. Investors with a long-term horizon, they can enter pharma stocks in a staggered manner. There is no need to immediately jump and buy pharma stocks because the US FDA norms have been becoming stringent for pharma stocks. We need to see how the whole space is going to be. Right now, pharma stocks are at the bottom. Most of the pharma stocks at the rock bottom price. Even in terms of their valuations also, they looks very attractive, but one need to be little bit cautious how the US FDA whole saga is going to impact the earnings of these companies. But my suggestion to the investors is stick to the large cap companies right now, and they can do
so would you stick with the Sun Pharma, Dr. Reddy's, Cipla, those kind of stocks? Are they on your preferred list?
Absolutely, for a retail investors, definitely they can look into the large cap stocks. Those the investors who have a high risk appetite, they can also look into the stocks like Divi's also in their watch list and in their investment list.
All right, let's move on to understanding, the decline that is there on the FMCG pack. How are you viewing this space? It's been volatile. One day the index is up, one day it's down. How are you looking at this entire space? Would you be cautious? There are some concerns of valuation. There are other concerns of inflationary impact still trickling in for them, the delayed impact of inflation for some of these majors. Would you be cautious at this point in time for the consumption names like these?
Sakshi, I'm quite excited with respect to the consumption story is concerned.
Okay.
Out of this, FMCG is the one of the pack. Of course, what we can see, Sakshi, from past uh, uh, 6-7 months, the trading patterns and the investment patterns of the sectors, we can see a complete delivery-based trading that's happening in these kind of stocks. So what we can see is some kind of profit booking, what we are witnessing. But for an investor who have a long-term horizon, definitely Indian FMCG sector is going to outperform over a period of time. There are some kind of blips will be there, like the inflation measures and all, but we need to see the things that are going to pan out. There are stock specific things we need to see. For example, the stocks like Warren Beverages and all, they outperformed this year in the same kind of pack. So investors need to be stock specific in this the entire story of FMCG. But every dip in FMCG for a long-term investors, it's a very good opportunity for the investors to
Okay.
invest, cherry pick these stocks.
Okay, let's look at some of the stock specific names that are buzzing in trade today. Let's start with the stock that has actually plunged in trade today. Shares of City Union Bank plunged as much as 9% during the early trade today. I mean, it's down by around 4% right now. And this was after the RBI really found divergence in the lenders' additional gross NPAs amounting to 259 crore rupees. How are you looking at this news? 5% down right now for City Union Bank. And what would you advise investors here?
So actually, it's a decent bank with a very long history, a mid-cap bank. And we what we witnessed is we witnessed a big rallies in all the public sector and private sector banks. And bank index Nifty last fortnight it went to all-time high levels also. So
Hmm.
the coming disclosure of City Union Bank undisclosing the non-performing assets is definitely a corporate governance issue. So that's the reason stock has came down nearly 7% in the morning, and it's recovered and now down 5%. Uh, for the existing shareholders who are in profits, they can take some profit from the table. I
Hmm.
don't advocate the investors to take this first dip in the stock for a fresh investments. Just wait and watch what exactly that these lapses. Is there any further disclosures will be there? These are the questions investors have in their mind. Okay, my suggestion for the investors is those who have very less risk appetite, they can stick to the large cap banks like uh, HDFC Bank and ICICI Bank. They
Sure.
can stick for the large cap stocks.
Sure. But the PSU banking stocks continue to be in momentum. Some of those stocks are rallying very, very sharply today. Case in point, UCO Bank, that's up by almost 9 odd percent today. There's been a block deal that's taken place. About 57.5 lakh shares have exchanged hands right there. The stock is up about 6.7% right now, but on an intraday basis, it was up by 9 odd percent right there. Apart from this, we have Indian Overseas Bank that's up by 6% odd. Central Bank of India that's up by 5%. Bank of India, Union Bank, Bank of Maharashtra, IDBI Bank, all up in trade today. Looking at this entire PSU bank rally that has unfolded in front of us in the last few months odd, how much more steam do you see really here, and which of the stocks would you be really positive on in the long run?
Uh, Sakshi, if you see the entire PSU, it's a very surprising rally for the investors. If I have to come back on your television a few months back, and if we advise bank, these kind of banks for the investment or trading radar, people would
Yeah.
have been may not shown the interest. But surprisingly, what we have seen is a bank like UCO Bank outperforming on the index, and it given more than 50% returns in last 15-20 days. So the
Sure.
momentum is there because the worst is behind them. This is the reason some kind of hot money is chasing these kind of stocks. But I advocate the investors just use these rallies. If you are sitting on a good amount of profit, take 50% of the profit from the table. And these are not the great investment propositions. If we see the long-term trends of these stocks, 10, 15 years, the trends have been disappointed in most of the cases.
Sure.
So use these kind of rallies uh, to book profits. And also, this is a pure momentum play at this moment. we need to see how the things are going to pan out over a period of time. Of course, the valuations look attractive, but how these earnings of the banks going to pan out, how they are going to increase their business, that is crucial. Of course, one thing is cleaning the books is one of the important thing, and going ahead, how they are going to penetrate their business is extremely crucial for these banks, Sakshi, going ahead. So to
Sure.
make any serious investment propositions in these kind of small PSU banks are concerned.
Sure. Understood that. Well, thank you so much, Mr. Bathini, for being with us on this show and sharing with us all those insights about the markets in several sectors and stocks that we just spoke about too. Let's look at how the markets are trading at this point in time before we wind down the show. Look at the Sensex at this point, 382 points gone there, slight more weakness than when we started off the show with 0.6% of a cut right there, 61,313. The Nifty also down by over 111 points now, 18,272. That's the level at which it is trading at. We are seeing constantly a lot of sectors down in the red, but will we see a bounce just like how we witnessed yesterday? There was a sharp cut in the first half, but the last half did see some recovery taking place. Will that really come in from Pharma, which is already riding high, the PSU banks, or will the other sectors also cut down their losses and come back into the green? That's something that we'll keep an eye out on. So do stay with us on to Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and do stay in touch with us through all our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in onto this edition.